All right, let's talk about a stock that has been a real roller coaster for investors lately. Sofi Technologies. If you're a holder, you've seen that dip, you've seen the red on your screen, and it's got a lot of people nervous. But today, we're going to dig into the bull case and talk about why this might be the exact moment to stop worrying about that dip and maybe start getting ready for the rip.
And really, that's the big question, isn't it? When you see a growth stock that you really believe in start to slide, it's so easy to second-guess yourself. Is this selling pressure a sign that you made a big mistake? Or is it something else? Could this actually be the exact opportunity that long-term investors are always hoping for?
Okay, so let's get right into that feeling. Investing is an emotional game. You put your money into a company like Sofi, and when the market just turns on it, it is tough. It's really tough to hold on. That fear is completely real, but it's so important to try and look past all that daily noise and really focus on the big picture here. And this is where it all comes down to perspective. I think this quote really nails it. For someone with a long-term view, this isn't a weakness, it's a gift. It's a rainy day sale. Look, SoFi's been through market storms before and it's come out even stronger. This dip could be a very small window of opportunity before some huge catalysts completely change the story.
And that brings us to what might be the single biggest factor that could send SoFi's stock soaring. We're talking about its potential inclusion in the S&P 500 index. Now, this isn't just about bragging rights. This is a real mechanical game changer.
Getting into the S&P 500 is basically the market giving you its ultimate stamp of approval. It says, okay, this company is profitable, it's stable, it's big time. But the real magic is the chain reaction it sets off. And since SoFi has already met the requirements, it really feels like it's a matter of when they get in, not if. So how does this actually work? Well, it's pretty simple. The moment SoFi gets added to that list, every single fund that tracks the S&P 500, and we're talking about trillions of dollars here, is forced to buy SoFi shares to balance their portfolio. This isn't people hoping the stock goes up, it's mandatory, automatic, programmed buying.
I love this quote because it paints such a vivid picture. We are not talking about a little trickle of cash here. This is a tidal wave of institutional money. It's like backing up dump trucks full of cash and just unloading them into SoFi stock. Historically, this kind of forced buying pushes new stocks way higher. If that announcement comes, today's price is going to look like an absolute steal.
But here's the thing. A huge catalyst like that doesn't just happen in a vacuum. It's only on the table because of the company's real underlying strength. And SoFi's strength is built on a fortress of technology. This is its secret weapon, its competitive moat.
Now, this might be the most important thing to understand about SoFi. This is not some old legacy bank trying to bolt on a clunky app. No. This is a technology company from its very DNA that just happens to have a banking charter. Its entire operation is built on a modern, super efficient tech stack, thanks in big part to their brilliant acquisition of Galileo.
And the difference is just night and day, right? Old school banks are stuck with these high costs and ancient siloed systems. SoFi, on the other hand, has this one seamless integrated app where you can do everything. And this creates a powerful flywheel effect. A member might come in for a student loan, but then they see the high-yield savings account, and then they start using SoFi Invest. It all happens in one place. This drives their costs way down and makes each customer way more valuable over time. It's a massive advantage. And that incredible tech advantage, well, it is now translating directly into some seriously impressive financial numbers. We're watching SoFi grow up right before our eyes, moving from a scrappy startup to a true financial powerhouse. And it's about to hit a major milestone. I mean, just look at this revenue trend. It really speaks for itself. You're seeing strong, consistent growth quarter after quarter, with huge expectations for what's coming next. This isn't slow and steady progress. This is a company hitting a massive inflection point.
And there it is. SoFi is right on the edge of entering what I like to call the billion-dollar quarterly zone. When a company starts consistently pulling in $1 billion in revenue every single quarter, Wall Street has no choice but to sit up and take notice. It solidifies their spot at the big kids' table.
Now, I know their recent stock offering made some people nervous, but it's really important to see it for what it was, a strategic power move. They weren't raising cash because they were in trouble. They were building a war chest to pour fuel on the fire and prepare for the massive growth ahead. It's a sign of confidence. They know scaling this business takes a lot of capital, and they're building the balance sheet to go out and win. So let's pull this all together. When you step back and you look past the day-to-day squiggles of the stock chart,
a really clear and powerful picture starts to emerge. It really looks like all the pieces are falling into place for a serious run in this stock. What we're really seeing here is a convergence of three incredibly powerful forces. First, you've got their superior technology creating that fortress around the business. Second, you have the financial validation of them entering that billion-dollar revenue club. And third, you have this massive S&P 500 catalyst just looming on the horizon, ready to unleash a wave of forced buying.
You know, these moments of fear and doubt in the market are so often where the best opportunities are hiding. The fundamentals here are rock solid. The growth is picking up steam, and a huge catalyst is right around the corner. So when you look at that price today, the question isn't really whether the dip is temporary. The real question is, are you ready for the rip?